Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hello and welcome to the College Investor Audio Show. Hey, we're so glad that you're here. Okay, so we're going to give you a little bit of hope today. When you owe the IRS money, it will attempt to collect the money you owe. Now, one of the most important steps you can take is to avoid the legal collections process. If you owe back taxes, the IRS may put a lien against your property. This means that the IRS is the legal recipient of the funds if you choose to sell a car or your house or liquidate any assets. The IRS can also issue a levy. Oof. An IRS levy allows the government to legally seize your property to pay a tax bill. Don't want that. The goal of every tax debt relief program is to help you avoid that legal action from the IRS while making your tax debt a little bit more manageable. While it's rare for all of your tax debt to be wiped out, there are some tax debt relief options for most people. What are the legitimate forms of tax debt relief? While nothing in life is surer than death and taxes, there is truly tax debt relief. If you owe taxes that you can't pay in full using cash or assets on hand, you may be eligible for some form of tax relief. These are the most common forms of tax relief offered by the IRS. Extensions. If you owe money that you just can't easily pay right now, but the total amount is reasonably, relative to your expected income, the IRS may offer an extension to you. This gives you more time to pay your taxes, but it doesn't result in a lower amount owed. Installment agreements. So an installment agreement is an arrangement between the IRS and a taxpayer where a taxpayer pays back over a period of time, usually up to 72 months, through an installment agreement. Individuals agree to make a monthly payment to the IRS, often through a direct debit transaction. Now, to qualify for an installment agreement, you must owe $50,000 or less in back taxes as an individual, or $25,000 or less in the current year for a business. The IRS estimates that 80 to 90% of all people who owe back taxes could qualify for this program. Good news. Offers in compromise. Tax debt relief. Now, an offer in compromise is the only way to reduce the actual amount you owe to the IRS. Under an offer in compromise, the IRS agrees to accept some amount less than the amount you owe. The IRS considers your income and assets before determining that it will accept a lower tax payment. How to pursue tax debt relief. So when you owe money to the IRS, it's important to move now, today, right this moment, to avoid having your property seized or your wages garnished. In most cases, the most important thing you can do is to file your taxes on time, of course. And once you file your taxes, be on the lookout for notifications from the IRS. Each letter will explain your options and how to avoid legal collections actions from the IRS. You can always call the IRS to speak with a collections agent. It is also possible to request an installment agreement online. However, if your tax burden is too high and you just can't pay it, you'll need to pursue an offer in compromise. You cannot apply for an offer in compromise if you or your spouse is currently in bankruptcy. If you want, you can fill out an application for an offer in compromise on your own. But the DIY route may not be the best option. Working with a credible attorney could yield better results for you. Of course, the results come with a price. You're seeking tax debt relief and then you get a bunch of attorney bills. Which leads us to the question, so should I even work with an attorney? If you're struggling with back taxes, a consumer advocacy lawyer could be your best option. Consumer advocacy lawyers have experience helping people navigate the tricky issues surrounding IRS rules and procedures. While lawyers can be expensive, it might be worthwhile to pay a lawyer to advocate on your behalf. Just be sure to interview a few lawyers to learn about their fees, their experience, and to be sure you mesh well with them too. Lawyers can help you understand the options available to you, and they can coach you through the tax relief process. Of course, you can do these things on your own, but the experience may be worthwhile just for your peace of mind. Will tax debt relief hurt my credit? Well, tax liens, which the IRS uses to increase payment compliance, do go on your credit report. So when the lien goes on your credit report, it has some negative effect on your score over 7 years if you pay off the tax debt, of course, or 10 years if the tax debt goes unpaid. While the lien will hurt your credit, the effect on your score will diminish over time. That's good news. It's just important to make timely payments on student loans, credit cards, car loans, mortgages, and then pay down or eliminate debts to improve your credit score. In a few years, excellent credit behavior can help you have a good or even excellent credit again. That was a short one today, but I hope that it helped. We just want to be able to give you some hope because it can feel pretty hopeless when the IRS is after you. If you know a friend going through the same type of thing, please feel free to share this podcast with them. It might help them too. You can always find out more and more and more about taxes, tax relief, all types of stuff. You can see tons of resources at thecollegeinvestor.com. We'll talk to you again soon. Thanks so much for listening.